What is going on YouTube? It's Sankey and I make videos on the stock market. As always guys, I've got a jam-packed one for you today in this video, but before I get cracking, if you don't already have a trading 2-on-2 account, download one using my link down below, open up your account, you get a free share of stock, you can join us in these plays, kickstart your investment journey. Alright guys, so it's been a red kind of day in the stock market. Your boy's taking a hit on his portfolio as you can see, and I know a lot of your portfolios will be down today, but that's nothing to be worried about. I want you guys to remain calm, cool and collected. That's the stock market for you. If it was up every single day, it would be far too easy. Now, you guys know I like buying on red days. It means there's a lot of opportunities and a lot of stocks are on sale. Those over at the Patreon will know that we went shopping in the stock market, say big time, right? Now, you're going to come across a couple more red days in your journey on the stock market, but there's one thing you guys can count on. I'm going to turn up for our session to guide you on exactly what to do. Now, before I jump into the first play, I'm going to need you guys to hit that like button for me, because you guys know the ethos over here on this channel. That's clear information, no waffle, with precise guidance. Now, let's jump into the first play. So before we jump into the headline show, I want to quickly touch on NIO. In our last team meeting, I told you guys, if you see NIO hit that $56 mark, you guys need to pounce on this play, right? It's going to do good things for your portfolio this year. You got to remember, NIO is no longer a $40 stock, right? They've elevated. That 7,000 deliveries that they did in December has taken them to the next level. So you guys need to jump on this play, right, when it's trading around this mark. So if you haven't already, and you do get an opportunity next week, guys, load up on some NIO stock. And for those of you worried about that 7-8% drop that you saw in that NIO share price today, I'm going to put you guys on some corporate finance game right now. There's something called the beta. Every stock has it, and what it does is it measures how that stock moves relative to the rest of the market. So if stock's got a beta of 1 and the market goes up 1%, that stock is likely to go up 1%. The reverse is true. If the market comes down 1%, that stock is likely to come down 1%. Now NIO's got a beta closer to 3, right? So it triples up. So if that market goes down 2%, NIO's likely to come down heavy, right? Around 6%. According to the beta. So NIO's a bit more volatile. So guys, when there's a bit more positivity in the market, you know that NIO share price is going up. Now guys, I'm going to start leaving the buy zones in the description box. So when you turn up to our daily team meetings, you don't even need to bring a pen or a paper, just eyes and ears on me. Now let's head over to the headline show. Alright, up on screen we have Churchill Capital, that's ticker symbol CCIV. This play has been blowing up non-stop over at the Patreon. We were early adopters in this one and we made some good returns already. So as you can see, I hold 100 shares, return over 40%, and we bought in on Monday. And I know a lot of the guys over at the Patreon sitting on 40-50% or more on this play. So if you're new to CCIV, I'm going to give you the lowdown and then I'm going to give you our next steps on this play. So CCIV, this is the SPAC that's rumored to be merging with Lucid Motors. Lucid Motors, they're a manufacturer of premium EV vehicles, right? Their cars range from around $70,000 right up to $160,000. And I must put on your radar, this is an enormous SPAC deal. They raised around $2 billion, right? Now, one thing I like to see, right, when you're looking at getting into these companies early is the management team, guys. You need to pay close attention to the strength of their management teams. Now, this deal is definitely ticking those boxes. You have the SPAC owner, Michael Klein. He's a former Citigroup executive, but also he has ties with a Saudi Arabian sovereign wealth fund called PIF. On the other side, Lucid Motors is ran by a guy called Peter Rawlinson, right? Now, he used to be a former chief engineer at Tesla working on the Model S, right? So they've got some real heavyweights in their management. Now, whenever any of the patrons ask me about any new EV play, I always ask them, when is this company set to do deliveries? Like, this is super important, because if you're going to invest into a new EV play and they're going to make deliveries too far into the future, you're going to be potentially holding a dead weight in your portfolio, and we do not want that, right? We're all about returns, right? Now, it's good to see Lucid Motors is kicking off their deliveries Q2 this year, and they're going to ramp it up next year when they release 2 new vehicles. They've also sorted out their manufacturing, their production facility, spent $700 million on that, right? And it's going to give them a capacity of 30,000 vehicles. This is good to see. They're going to ramp that up, right, in a couple of years time to 400,000. So this company, they've got big plans and they're doing big things. So in terms of our strategy, our next steps with CCIV, guys, there's a couple of question marks around CCIV. One is the actual merger. Another is the date of the merger, right? Another is the pre-order volume of their Air vehicle that they're releasing, right? So guys, these are question marks that's going to cause volatility in this stock price. And you guys know we're all about making profits on all of our plates. So as I've said to you guys before, you know what's coming. You guys need to make sure that you've got your stop limits set on this plate, or your trailing stop losses if you're using your Robinhood app, right? make sure you've got this sealed and secured so you guys walk away profitable from CCIV no matter what. For those of you who are new to CCIV and you want to join us on this play, if you're already holding and you want to load up some more, guys, I've set a strike price at $15. If you catch CCIV under $15, consider loading up on this play, right? It could be a good one, either to take short-term profits or to hold this one for the medium to long term. Alright guys, so it's our community play session where I give you guys my 2 cents on the most popular ticker that you guys leave down in my comment section. So you guys wanted me to cover TLSS, so here we have it up on screen. So as you can see, I'm holding 20,000 shares, return 70%. I've actually added 5,000 shares during the current dip that they've had. So guys, I'm actually holding this one through the current volatility that is going on right now. So, and I was up about over 200% at the start of this week. This is one of our flying MVP penny stock plays. Now, guys, if you're new to TLSS, I've profiled them before. They're a e-commerce fulfillment company, right? So they do the deliveries. This is a bit of a bounce back play, right? And they're doing very well. The management team is reorganizing this company. They've expanded into different states. They're acquiring different businesses and they're doing well. And they're benefiting, right, off the boom that we're seeing in e-commerce at the moment. So that's why we like this play. Now guys, I'm holding them through the volatility. They've dropped around 40%, right, in recent times, guys. This is because we haven't received any news or confirmation on the acquisition that they made, that they announced in November, right? Remember guys, that's Cougar Express. So the one thing you guys must know is this doesn't mean that the deal with Cougar Express is off the table, right? In business, you guys are going to notice, right, from investing into a lot of these companies now, joining us on a lot of these plays, that companies, they have a lot of delays in their plans, right? We've seen a lot of SPAC mergers get delayed, and this causes volatility in the stock price. You're going to see a lot of acquisition completions get delayed, and this is going to cause volatility because there's a lot of investors who are fearful that the acquisition isn't going to take place, right? Got to remember that stock price was driven up, right, off the back of them actually completing their acquisition, integrating it into their company, right, reaping the rewards of higher revenues, right, of a better business, a bigger business, right? So now you have investors who are fearful, they're selling off their stock in large quantities. That's why you can see that stock price has come down dramatically. But guys, we're still comfortably in the profit zone on this play because we got in early, right? Now, if they come out, you know, next week and say, okay, everything's completed, what's going to happen? You're going to see TLS go through the roof. All right, guys, so if you've been rocking with the channel, you know what time of the day it is. Question of the day time. This comes from Ross. He says, does the share price only move on good news? I would have thought if a company is making millions or billions, the share price would have a fair value. But if people sell for whatever reason, it will go down. Could you make a video and explain how it all works? So thank you for sending this in, Ross. I appreciate you. So to kick things off, firstly, I want to say that different companies have different sensitivities to catalysts, right? So I'm going to give you guys 2 extreme examples so you know exactly what I mean. If you take Amazon, for example, at the back end of last year, they actually did good things, right? They acquired businesses, right? They made a lot of money, right? Even they acquired a company in the autonomous driving sector, and that did nothing to its share price, right? So it's almost like investors are desensitized to whatever it is that Amazon does. Now take an example like BNGO. They can come out with the slightest news. A doctor, says, okay, Sapphire is good. That share price is going through the roof, 30-40% on the day, right? So that's the first thing to note. News does different things to different companies, and often the more mature a company is, right, the less investors react to that news. And this is because over time there's a level of expectation from the investor, right? If a company, for example, doesn't grow that 20%, right, every year, there's going to be a problem. This is one thing I'm always looking out for, right, when I'm going to present you guys plays, how sensitive, right, that stock is to news. And the more sensitive it is to news, right, the quicker that share price can pop. Now, one thing I must say, if we move over to fair value of a company, yeah, every company does have its fair value based on, its revenue numbers, its forecasted revenue, right? Every company has its intrinsic value. But what you'll find is a lot of the plays in your portfolio, right, they have well surpassed their fair value, right? This is because there's a lot of capital, right, flowing around in the economy at the moment. There's a lot of disposable money, right? Interest rates are very low. Investors are always seeking, right, for higher yielding assets, right? And this is why a lot of money flows into the stock market, right? And that's why you often see market valuations running away from the fair value. And sometimes this can be in multiples, guys. But that's why I'm so focused on Buyzones, right? getting you guys to buy in at the strike price, right? To get that valuation, that market valuation down towards the fair valuation, right, as much as possible. But guys, this shouldn't put you off investing into the stock market or investing into some of these high growth plays, right? Because the plays I give you guys, right, I'm trying to ensure that they deliver for investors year after year after year, right? So yeah, the market valuation might be above the fair valuation. That's going to be the same thing next year and year after and year after and year after, onto the point that you're ready to sell out of that stock and you made fantastic gains by investing into that play, catching those dips, right? Getting in at the strike prices, down the line, you're ready to sell, you've made fantastic profits. So as always, thank you very much for tuning in today, guys. Do light up my comment section for me. I want to hear from all of you. If you're new, hit the subscribe button, become part of the family, and also check out the link down below to the Patreon. I spend a large portion of the day talking to the community and answering questions. So guys, I want to wish you guys a good weekend. I'll be delivering you guys content over the weekend to get you prepped and ready with a strategy for next week to crush it in the stock market. So as I always say, check into the channel each and every day. Stock market is rapidly moving, and I'll catch you guys in the next one.